Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up 1.1% there. On the S&P Nasdaq is up 0.8%. Semiconductor was down quite a bit earlier today. It looks like kind of caught up a little bit, down only 0.5%. Dow up 2%. Russell 2000 2%. Transport 2.5%. Looks like transport led the market today. It's been a while since we saw transport leading the market, but today, nonetheless, we see the transportation average leading the market there. Banks 1.5%. Same with the energy. Biotech did get hit here, 2% negative. Biotech's been struggling last couple months here. Healthcare up 0.5%. Home builder up 2%. Utilities pretty much same, along with the retails. Emerging market up a little bit. Bitcoin continues to get hammered today, down 8%. Gold, silver down, miners up. Dollar pretty much flat. Oil up 5%. Treasury bond down. And VIX got hammered, obviously, with the S&P or the equities being down today. Let's see with the S&P 500 ETF. Spider, 65-minute chart here. So this is where we close on Friday, the last hour thrust there. That pretty much the last hour thrust pretty much engulfed the 3 hours of trading sessions on Friday, the intraday on Friday, right? Pretty much an engulfing candle. Closed the Friday pretty strong on the last hour on Friday. And with that, we did see that gap up here. Again, look at that. This is where it opened up. And then lower wicks suggest, however, that we did see bears coming down, filling that gap quickly. Because I think if that gap would have been open, if this gap that was opened up this morning, that seriously would have really favored the buyers this entire week. If that gap would have been sustained, not been filled. Nonetheless, that gap got filled. With that, you can see that lower wick. And we all know that when the gap gets filled, what does it do? If it's an up gap, in this case, it is an up gap, right? It gapped up. So it's an up gap, right? Once the gap gets filled, it's going to act as support. And he did that. And with that, price got right back up. And that was a first hour price action. With that, we were able to get above that pivot there. And you might be wondering, why did you draw that pivot? Like right in the middle of that candle there. I'm going to show you, a little bit here. Just keep it with me. I just want to talk about what happened. Stay with me. I just want to talk about what happened today's price action. So that's the second hour staying right above that pivot, aka neckline. You can see that that level is acting as a micro. So that my midterm moving average residing in that vicinity. So 2 hours, second and third hour, we kind of hung around there. And then finally on the fourth hour, we saw that move above, getting that move to the upside, right? And then the fifth hour, we kind of stalled there, came down, and sixth hour, we held that. And you can see my short-term moving average acting as a resistance here. What I wanted to show you, though, why I drew that 457 as a neckline, not putting it up here, right? Coinciding with that candle body, why did I put that in the kind of a middle of the candle there? Is because because you can see there's some intraday fluctuation. So when I go to a line chart, do you see that? This is a line chart. So when I go to a line chart, we can clearly see, first of all, this is important because when we look at the line chart, we can clearly see that that's a subtle higher high we have going on in the micro term. We do have that higher high on the first time since this decline there. And we can all see that definitive neckline, right? That's a neckline. Neckline of what, you might ask? Neckline of this potential double bottom here. You can see that that's a double bottom, right? This is a neckline of that. We broke above it. So with that, we do have some micro term momentum here. Buyers are gaining a little bit of momentum with that follow through. We saw again last hour of candle there on Friday. We did see that follow through. We did end the day with on a positive note. So it's gonna help But overall, we do have micro-term cultivation of higher highs and you know, a little bit of bullish sentiment in the micro term. However, in the short term of things, if I zoom out here, we're still dealing with a downtrend in the short term. You can see that we got these lower highs, right? Lower lows. And the short-term moving average continued to make things hectic. For the buyers here, you can see every single time we hit that short-term moving average, sellers rush in and then bring the price down. That's been the trend. So despite the fact that we did see that bullish move today, as of today, I have to say, as of now, things can change quickly as tomorrow, first 2 hours. But as of now, with the data that is at hand in the short term of things, I have to give benefit of the doubt to the sellers. But there's a side note. While the buyers got a little bit of momentum going in the micro term, and buyers need to continue to push and keep that momentum going, reclaiming that short-term moving average. Keep in mind, the short-term moving average has not been reclaimed this entire time. So if we do see a move to the upside, reclaiming it, and you see that short-term moving is acting as support, because right now short-term moving average has been tamed by the bears. Bears controlling the short-term moving average and supporting the bears. For buyers need to reclaim that, make the short-term moves act as support, and obviously it's going to take some time. It's probably going to may even take next couple days to really find out. However, the bears continue to push here. We lose some of these levels, 457, 455. Yeah, we're going to come right back down to 448. So 457.57, 455.88 is the level to hold going into tomorrow. Let's check that oscillator and see if we can extract any more information. You guys, you might be wondering, what is that purple box that you drew right there? I actually drew that purple box like early December, like December 1st, right? When this thing came down, because I talked about this is the level. This might be the level where market can produce some shenanigans for both bulls and bears, right? For both bulls and bears, right? Traps, head fakes, shenanigans, and all of that, right? It's going to trap both bulls and bears. Let bulls get stopped out of their longs. Let bears get all excited with their shorts. And then market kind of does this twisty back and forth dance. And then, you know what I'm saying? And then market, gets right back. So this is the level that we talked about. We also talked about a 50% retracement, right? And I drew that up again. This was back in December 1st, a week ago, that 50% retracement in that vicinity. And that's the level coinciding with this gap that has not been filled. And that was the level that we did found that support. And that's what we did see that last hour supply, not a supply, a demand. Last hour demand right on that support, and then we saw them move today, right? That was at 449. And with that, what we also talked about is that potential bullish divergence. That bullish divergence is not dead, because you can see that oscillator really thriving here. And you can see last time, you see that purple box area. Last time when we saw this signal, and when we saw that oscillator advancing very, very confidently like this isn't a jittery, like this, where like doesn't know where he wants to go. I mean, this right here looks like full thrust there, along with bullish divergence formation. And you might ask, what is bullish divergence? Okay. Well, you can see we got lower lows here on the price action, kind of like here, lower lows. Are they lower lows? Lower lows, right? Why is my oscillator putting in cultivating higher lows? Lower lows. Why is my oscillator not printing lower low, but gaining, cultivating, establishing that higher low, right? So there is dip buyers in that vicinity, and that oscillator is not pushing it all the way down. Meaning, when it snaps back up, there could be this level, could be the level for a reversal. So the oscillator is actually favoring the buyers going into tomorrow. The oscillator is actually chanting for bulls to win. Keep in mind, last time, you see the short-term resist or short-term moving average? We did see 1 day or first hour of gap down. And that was a little bit of this. And then made a move. And then came back down. And then reversed. So it took like a week or so. But what was crucial is that, because the market is going to fluctuate, it's going to go straight up. Not always going to straight up. It's going to fluctuate. What the crucial point was the setup, the bullish divergence happened, reclaiming the short-term moving edge. Even it pull back shallow, stop short, goes right back, reclaim, comes back down, cultivate that higher low. And then when finally bears give up, you see bulls making that run. And it doesn't happen overnight. It doesn't happen over, a couple hours. It takes a couple days that setup to play out. And that's what happened back in October, right? So this is the juncture where bulls are setting up, preparing to make that run. It's still gone. This is still a level where we could see shenanigans, meaning gap down, gets right back up, gap up, slide all throughout days before getting right back up. So this entire week, I expect to continue to see shenanigans. But if we can kind of understand the overall picture, I think we can navigate this market well. You guys enjoy the rest of this evening. I'm going to come back. We're going to reassess the situation. And good luck trading tomorrow.